Yeah, what's up, everybody? We'll do this in real time right now. So I opened this just now. It's a 145 calendar spread for AMC. This is not trading or financial advice. We have 4 minutes to market close. We have some volatility in the stock. It's jumped up. Maybe we close over 50. We can destroy these shorts. So go to AMC. Again, this is how you do this, right? All right, wait, let me cancel this debit spread because it didn't fill. All right, so this is a call debit spread naked for June 25th, 2 weeks out, $15 available for the moment. So let's go ahead and go to trade options, June 25th X. That gives us at least 2 weeks for this to attempt to play out. Now, in no means do I think this is going to work and make 140, 145, but anything is possible in the stock market. We never ever say never. And if you go June 18th, so we can get a $4 spread here, maybe $7. I just want to show you with this 3 minutes I have remaining how fast maybe we can or cannot get in this spread. So go here, 140, sell the 145. $11 at the ask. Look at the bid on the left, and the ask is 2 and 18. I got 15 available. Let's try 9. Debit to buy it, of course. All right, 1, 2, 3, didn't fill. Replace the order. All right, go to 10. All right, boom. It already knows that it's a debit. So, all right, 1, 2, 3, didn't fill. All right, this is where the bid ask gets you on spreads. Look at that spread, 1 to 17. The median is 9. Well, we already tried 9 and 10. That didn't work. So now we're pushing a little further. Boom, look at that. $11 spread. Do you understand that process? That is the most important thing I can show you. Yes, I have these long contracts. I don't fess around when it comes to selling options or buying options. I bought these $315 calls for January 2022 because I'm no dummy and I don't buy short expirations. This is armored bull trading. We trade safe and smart and armored, okay? I got 10 $5 puts for January as a hedge. I have 7-to-1 ratio there, or well, I guess 10-to-3 if you just want to look at it the easy way. So I got 3 in that whole 5 set right there. So I got 3 calls that fits into the $5 puts 3 times. So that's 3-to-1 basically. Anyway, so I got 2 more minutes. Let me see how much cash I got. Let's play a little gamble game. $4 and change. Let's go back to that $4 spread. We got volume ramping up through the roof. All right, it might just be a thing for the close. If we can push them into close, we can kill this thing. All right, let's go. $4. We'll attempt it. I don't think it's gonna fill, but we can try it. All right, boom. So we'll let that sit for a moment. Price fades. If the price fades just enough, it'll pick that spread up. I got 86 cents in there. Let's see. So 140 to 145. That is a $500 potential spread there, okay? And you can see we're up 9% already on that $1 move. Let me see if I can sell this garbage right here real quick. Probably not, but we can try. We'll just put 2. I want to credit because I'm closing this position. All right, let's see. It took it. Oh, it gave me $4. Did y'all see that? All right, so now we can go back to AMC. Y'all saw that I put 2 and it gave me 4, right? So don't always be hating on Robinhood, y'all bunch of crybabies, okay? So we have 1, so let's go to 5. Let's see if it fills right away. 1, 2, 3. No, we got about 30 seconds to market close. Here we go, here we go. Let's go 7. Spike it up. I'll pay $7. Oh, look at that, 6. So again, all you haters on Robinhood just gave me the best fill on this contract. Yes, there's an extremely low probability that it works out in my favor, but at the same time, you just saw how it happened, okay? So Robinhood's not always out to rob you, just so we can clarify that. I got $2 buying power on this account. You're looking at the 1 month. We're up $2,800. That doesn't make any sense. So you can see some of these spikes in here. I think I put $100 or $200 in here. Yeah, so that's where we were, right, when it spiked up. And but I didn't sell because I was looking forward to banking off of these guys. So with that, we have here. Let me back up real quick. Let me go to AMC. Okay, real quick. So if you're on Robinhood and you want to see all the options you have on Robinhood, so the current price $49.32. All right, little after hours action. So total 19 contracts. Okay, what does that mean? Well, 19 contracts means literally how many contracts I have, because every contract is a contract count. You don't, if it's a spread and it's 1-to-1, you have 2 contracts, not just 1, okay? With that being said, Make sure you are trading appropriately, right? Hedge your positions. The reason I teach spreads is because they are self-hedging, okay? Now, one important note to realize about spreads, hopefully nobody calls me or anything. Let's see, move that out of the way, that out of the way. One thing to know about spreads is that, okay, so we did not close above 50, which is fine. Real quick, let me look at this real quick. So Robinhood's retorted 10-minute candles. Let's see what they say we closed at. 4 p.m. we closed at 49.36. All right, let me check TD Ameritrade real quick. And let's see. Boom, boom. TD Ameritrade, AMC, we closed at 3:30. Oh, I'm sorry, I got an hour candles. Hold on a second. Let me drop this down to 5-minute candles. Zoom in, and we closed at 49.31. So every single call 49.31 and down has expired in the money. So TOS is showing me 49.31. Robinhood showing 49.36. That's quite annoying, I know, but it is what it is. I trust TOS more than I do Robinhood as far as the close price goes. We got some really great momentum today. If you would have been day trading this at around 240 around power hour, like this is one of the only times I've ever seen power hour actually work, you know, how it's intended. And we saw a run from, we bottomed out at 45.82, and from those 4 bottom candles that literally tested the same area of support today on a 5-minute chart, they literally just exploded back over. And as soon as it broke over that 46 mark, you know, again, we just broke right through and shot up. So a little after hours down action, which is fine. We're not concerned with that, and I'm not honestly concerned with the chart at all. My descending triangle, we do have a confirmation breakout on the 150-minute chart. That is my special chart I have. CCI index is crossing over. If you guys aren't in Armor Bull Trading, you need to be so you can learn all the crap I'm talking about right now. Our Discord is Armor Bull Trading. YouTube is Armor Bull Trading. Facebook is Armor Bull Trading. The whole 9 yards. So with that being said, on these spreads, right? So let's go back over here and look at the spreads we have. Okay, so we have SPY put. Now, why do I have a SPY put? I have a SPY put to hedge the entire market because I have zero faith in the fraudulence that is being bestowed upon us, right? I don't believe that the market will hit 500 before, as far as SPY goes. I don't think it's going to hit 500 before it hits 400. I do think this is a huge moment of like, nobody really knows what's going to happen, because I'll be honest, if AMC squeezes like the rumors and stuff like that, where we could see share prices in the thousands of dollars per share, and including GameStop, I guess, would tag along for the ride. Those kind of things are not to be taken lightly, because in the event that, let's just say it went to $1,500 a share on AMC, which I do think is absolutely possible. Let's take $1,500 and times that by 501,800,000 shares. Sorry, I got too many numbers there. One moment. Can't add over here. So 518,000. Boom. Okay. What am I? Hold on. I forgot how to add or something. I'm just going to do 501 million, make it easier. 1-800. Hopefully everybody had a good trading day, trading week. Oh, okay, I know what I did. I didn't do 508 million. Okay, anyway, so let's do it exact. So 501.8 million, and that is going to be 757. Let's see, billion. So that's $752 billion market cap at only $1,500 a share. All right, now that is insanely high, okay? But note that good old Apple has a 2.2 trillion market cap, I believe it was last time I looked. Now the share price has changed since then. So let's see real quick. Yeah, 2.13 trillion US dollar market cap on Apple at $127 a share. Let's see. Where is their share count real quick? Let's see if I can find that real quick. I know Fidelity's got all this information readily available. Okay, so summary. Shares outstanding, 16.69 billion shares. Okay, that is insane. All right, that's a lot of shares. Okay, good old GameStop only has like anywhere near that. Let's see. So GME. Now I don't know what the float was for GME. I just know that AMC is 501 million, 501.8 million, and if we hold 80% of the value of the entire company, it's common supply and demand sense that we have the winning hand. We just have to wait, because if you people don't understand, these people are masters of psychological manipulation for retail traders. They've been doing this for years and years and years and years and years, and they're just taking you all by the hand, leading you to the water of fire. All right, and you think you're drinking the Kool-Aid, but you're really drinking poison. Okay, and you go here and you buy all your calls or your stock or whatever, and you're like, all right, I'm good. The stock's gonna go up because I saw this article, and then 2 days later, boom, the stock hits the floor, and you're like, oh my God, what happened? I lost all my money. So I could be an actor, who knows? So what I want to say with that is don't do that to yourself, right? And if you trade options, rule of thumb, if you trade a short expiration, one, you better be a very efficient options trader or a very efficient day trader and understand completely what you're doing. Because if you don't, I promise you will lose money, all right? And sometimes you'll lose a whole lot more than you want to on a move that just randomly happens, okay? So like Clove, right? So my thing about the hedge funds and having connections and et cetera, they talk about collusion. Well, I mean, we already know that they run the game because they have millions and millions and millions and millions of dollars at their disposal. 32 billion market cap just on Citadel alone, right? And they're over here like, okay, well, let's get these 15 media outlets to send different articles across the board at different timestamps so we can show all these people that they're wrong and their stock of AMC, for instance, is going to go down, and it's worthless. Like, matter of fact, like, just look at the facts. Do your own research, dude, and stop reading freaking article headlines and thinking it's true. Read the article. Sometimes these articles with somewhat almost negative headlines are actually positive, okay? And then vice versa, okay? So you had AMC, if you missed the AMC short squeeze, well, here's X amount of other stocks that are, being shorted heavily. Okay, well, they were right. They were being shorted heavily, but it was bait, and people took the bait so hard, right? So let's go over here on my chart. I'm on my computer. So let's see, Clove. That was a perfect example. So in our chats, mine and a couple of affiliates, we called out Clove long before it actually ran up, right? So at around, let's see, it was like $9 a share, I believe it was. Yeah. So let's see, on June 7th, we were around $9 a share. The day before at 9 as well, and all of a sudden on June 8th, it shoots up, opens at flipping $16 a share, goes up to 25 almost, and then comes back down to lead up another 3-bar play and busted out 28.85 on the high. And then now it's sold all the way back off down at a low of 13.43 and closed under a moving average over here now today at $15 even. So for anybody who thought that ride was going to go like AMC did, then they just got destroyed. Okay, now am I saying Clove is completely done? No, not necessarily. But if we look at our moving averages, let me get on a daily chart. Okay, our moving average is putting us at a gap fill at 1197. So I've already drawn on TOS. The out of steam date, 100%, in my opinion, August 23rd, it'll be dead back down to $12 or less on Clove. Now, unless they have some, good information for the company that makes sense, that would make sense, but probably not. That is my opinion. That is not financial advice or trading advice either. But anyway, my point is, don't listen to these freaking articles, because they pumped the article, they pumped out Clove, they pumped out Workhorse, they pumped out like 6 other stocks, and everybody was asking me, hey, yo, what's going on with these stocks? People are saying, I think I'm going to get into this and this and this. And I'm like, it's a distraction, man. Like, it's, yeah, you might make some money. Make money if you can make money, like at whatever cost, right? You want to put money on options or stock and then flip it, that's perfectly fine. Had I not been at AMC, I would have absolutely taken advantage of Clove the moment I saw it break over $12. And with that being said, just do your own due diligence. Be mindful of bullcrap articles, right? And things like that. Don't automatically take someone's opinions on YouTube or Discord or mine or anyone else's just as fact, just because we may or may not know what we're talking about. That's completely irrelevant to your money, okay? Your money is your responsibility, right? Just like Will Smith said, your emotions, your reactions, your life is your responsibility. If you're miserable, it's your fault. Do something about it, okay? If you're happy, that's wonderful. It's your fault that you're happy. Whatever you're doing is making you happy. Likewise, with your money, you can't blame anyone else for your actions. You're not retarded. If you're digging off in the stock market and you're trying to learn how to trade options or stocks or equities or, stocks, whatever, derivatives, any form of the stock market facets, right? If you're doing any of those things, you cannot be sitting here blaming somebody. Oh, well, Johnny said to buy, AMC at $20 and I made it to 40 and he's holding, but I'm holding and now I'm losing money. What do I do? Okay, first of all, if you bought at 20, you're in profit, so you can sell and make profit and walk away. Or you're going to hold like Johnny and he's going to hold back to $10 a share and buy 1,000 more shares, but you don't have any more money, so you can't buy any more shares. So now you're stuck from 20 to 10, lost 50% of your investment when you were up 200%, right? So with that being said, don't depend on others to make your decisions. It is your responsibility to make your decisions, okay? Now that I've done that little rant, let me pop back over to AMC chart, Thinkorswim real quick. 49.97 after hours. Let me see if we tagged 50 in the breakdown 7-minute chart. By the way, 7-minute chart is my favorite. We hit a high of 49.60 after hours. 1 second. Let me get over to the proper chart. 111. Dun dun dun. Let me see. High, $50.30. We have broken 50 again after hours. That is beautiful. Monday is going to be a wonderful day, in my opinion. That's why I bought all these. Sorry, babe. I'll talk to you later. I have to edit that out of the video now. I got all these spreads. So when you buy a call and you sell a call on the same expiration, it is a debit spread. Henceforth, this position here. Okay, my total risk is $6 to make the total difference of the spread is $500, $5 on options times 100 shares, $500. All right, real quick, we'll be editing this in the video. Hopefully there's a few glitches in there and not too much. Okay, real quick. So I hedge my positions here. Boom, SPY. I expect the market to go down. That's my opinion. Not trading advice, financial advice. If this blurs out the other part. I bought 3 $115 calls for AMC for January 2022. 10 $5 puts for January 2022. In the event we have a huge run up and a huge drop, just like GameStop did, IV alone will increase my premiums, which give me a nice return on those contracts. Now, real quick with the spreads. I showed you in the beginning of this video how the bid-ask spread moves, what you have to do to get into the position. That goes for all spreads, debit spreads, credit spreads, calendar spreads, debit, credit, calendar. Anyway, I don't trade credit spreads. I hate them. We got videos on that and why. Real quick, so what you're expecting here for a 145 calendar, I'm expecting 145 to break off on the price on July, right? That's the expectation of the contract. Does it have to be at 145 for me to make profit? No. Will the profit be at the highest point at 145? Yes. However, if I buy back, if the price retreats per se, right, and it grows closer and closer to expiration time, and my $145 call that I sold becomes less valuable, but I'm like, you know what, man, I think we're going to run up a little more. Guess what? My long call is going to be available for me to hold on to, and we'll be good to go. Now, most chances these, when you do these types of spreads, it is very expensive in most cases. So most likely, if you're a small account especially, you're not going to have the liquidity to buy back the short position because of how much it'll cost. Yes, technically it would be more if it ran and you made more money, et cetera, but at what cost, right? So right now we're at $49 a share. So we need to move literally almost $100 a share in order to make this spread at max value. So we'll go ahead and build it for, let's see, July 9, July 2nd. I'll show you the breakdown. right here. So make sure you don't buy first. So buy 145, sell the other one, move over one expiration date, boom, there we go. Okay, so right now it's showing $100. Max profit at $100 cost. My cost is I think 95. So 27.53 is the max profit at 145 at expiration. Do you have to hold until expiration? No, you do not. Your max loss on this trade is literally $100. Oh, but wait, what if it goes to 500 or 1500? Well, there's a 100% chance you're going to be assigned. Your long 145 contract will cover your short 145 contract. So essentially, the shares go to say $300 a share, $400 a share, something like that. Your 145 will likely be assigned ASAP, and you will have to, quote unquote, be called away for 145 shares. I'm sorry, $145 shares times 100. So 100 shares at $145 each that you will sell them to someone else for. Okay, that's assigning the contract. They are exercising their right to buy from you those sold 100 shares. All right, but that's why you receive the credit for it. Now, if it's below 145, you keep the premium, you're good to go. And at 140 to 145, these contracts will do pretty well. And you can see at expiration, so let's see, at $125 strike price, you're looking at 150% return all the way up to 195% return. So dang near 200% return on this. And if you're going across, okay, the price keeps going and going and going and going and going and going and going, you would have to get all the way to just about $400 a share, and you'll make 2 cents at $3.92. So anything above that, you'll lose your $100 because at that point, it's completely out of reach. Now, at that scenario, you know, oh, you know what? Hey, I know for a fact it's going to 400 and the position is kind of flat and you have $500 in your account cash. You can go ahead and buy back that short. And I mean, it's July 9th, so that's literally about 1 month away. So that's a fairly safe trade. Within a week or so, if nothing's happening, you need to cancel, close, and move on to a longer expiration date. That is what I preach because it works the best. You will lose less money trading longer options in almost every scenario. That is my 100% opinion based on my factual experience. You can see your break-even prices are completely wild based on the contracts, $64 and $392. Your total profit, $27.53. At what point do you realize total profit? Well, you'll receive about 90% of the value in the event the stock price gets up to about $142, $145, $147, something right around that range. The moment it goes over 145, you're going to start losing a decent amount of money on that short. However, your bought is also increasing in value. And because it's a longer expiration, you are gaining more value more rapidly, and it will hold its value slightly more rapidly. I'm sorry, slightly more steady. So 145 buy, 145 sell. Yes, let's look at the basics here. $2,753.95 is your total profit at 145 at expiration. So that's 1 month away. If the price goes to $100, do you think that this spread is going to still be $100? No. It's going to probably be around $700 to $1,500 to buy this same exact spread in most cases. All right. The closer the probability is to hitting on the head, the better off you are with your contracts. If you buy these at $100 now, I mean, we can go back and look. Let's see what it shows. Let's close that. So earlier today, when the price was flat before the run up, it was at 60 bucks. So you could have bought these same spreads for around 75, potentially 50 bucks, you know, if you get lucky there. If you put a limit order in for these, it's not going to get picked up. I showed you in the beginning of this video what you have to do in order to get in and out of spreads, right? And I did it very quickly. I undercut when I was trying to get out and get that extra $2 or $3 to buy that other spread, but then I overshot my price and actually got a still better price than what I put based on the current market move of the bid and the ask. The market makers got to make their money, right? They don't care about you at any level. They will not drop the price so little Johnny can get in, and they don't care about anything outside of their own pocket. That is what it is. Understand that, and you'll be a lot better off. So here's your spread. July 2nd to July 9th expiration dates. And as you see, I accrued 5% return so far, $95 cost, $100 now. So with this expectation of a very short 1 month spread for 145, if AMC chooses to run up like crazy, I'd probably sell this for between $400 and probably $1,800, depending on how high the price went. Likewise, moving on to debit spreads. Essentially, real quick note, and I got to make this video quick. Buying the 3 call options and and then buying also the $5 put options for the same expiration date, effectively, regardless of expiration date, makes that a strangle because I'm buying all calls and I'm also buying puts. I didn't sell anything against those positions. Definitely not selling anything against the calls on AMC because I don't think it's a very smart or safe idea when I have long contracts that can improve value rapidly. I want to make the most money, right? So with these debit spreads, I got 140 to 145 twice. I got one for this Friday coming up next, so 6 days out, 7 days out, and then the other one is 2 weeks out. Now, again, $500 spread, $6 cost. So I'm literally risking $6 on a fairly decent probability to run back to $65, $75, which will increase the value of the spread probably 5 times, 6 times over. Same thing here with the longer expiration. So this one's $11. But you see that I paid $6 for one a week away, and I paid roughly double, almost double for one 2 weeks away. So what was smarter here? Because of the amount of cash I was trying to spend, it was better to buy the longer one at least first, and then that's a higher probability so I can risk $6 on the next one. I know I'm talking really fast. Hopefully this is all kind of coming together. When I edit this video, hopefully it kind of makes sense. So I got 2 videos I got to put together now. Anyway, with that being said, please focus on proper trading technique, okay? You can read psychological books. You can read every trading book imaginable, but understanding human psychology, which is in your own brain, is how, in fact, you figure out how to do this as a whole, okay? If you sell, matter of fact, when the price was at $77 a share pre-market on AMC a few weeks back, I could have sold for almost 80 grand, which 66,000 would have been profit, okay? And that was only in a matter of last month, right? And I'm telling you this not to show off or anything like that. My account's not $1 million gazillion dollars and whatever. But the point is, the trade was only 10 grand and it turned into almost 80. And it's like the options on the other side of that were about $8,000 as well. So it's, a little higher than 66. Point being, I could have sold them, but my expectation, shares have no expiration date. Eventually, this squeeze will happen. If it only goes to $1,000 a share or $1,500 a share, that is fine with me. I will still break $1 million. I will be a very happy camper. I paid 10 grand and I walked away with over $1 million. I'm extremely happy, okay? That is one of those beautiful black swan events. However, if it only goes to 500, that is still satisfactory. Let's just be real, dude. I bought the shares for $12 average over here, and it goes to $500 a share. It's amazing. Oh, wait, $500,000, $100,000 a share, and blah, 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 blah. Okay, well, that's great. Check it out. Supply and demand actually will produce things like that to happen in a perfect scenario, these insane price targets, right? And it's delusional, right? They call us delusional. They laugh at us, et cetera, et cetera. They also laughed at Michael Burry when he predicted the housing crash 2.5 years before it happened. So, with that being said, he was rolling his premiums and premiums and premiums and premiums, slowly having to sell positions to keep this position going. But that position ended up turning him out. I think it was 400%. So, walked away with $2.something billion on the trade. So, with that being said, you have to understand, okay, don't always just assume, things are going to work immediately. That's why I say don't trade short expirations. So on that note, there's the account. There's all my AMC positions and the SPY put and my one Doge. So have a good one, everybody. Enjoy.